Hello and welcome to Moneylife. This is Sucheta Dalal. This week we are going to talk about a problem that affects us all the time. Know your customer requirements of banks and financial institutions and the harassment that we face when you have to update them. Now, the question is why now? Why again? Because the Reserve Bank of India seems to have finally heard all of us and it acknowledges that there is a problem, and there is especially a problem for people who are less privileged, who are living in small remote places, who don't have the economic means that we have in cities. And the RBI acknowledges that there are lots of complaints, so it wants to simplify KYC norms. Now, how is it doing this? It has put out a draft set of directions. So, I don't know if all of you know, but RBI issues master directions. The first time it issued master directions was in 2016 on the KYC issue. So, it has published draft master directions, which I think all of you need to look at, because 6th June is the last day for giving our feedback and suggestions. And my column is a way of giving feedback on what I think about it. And Moneylife Foundation, a not-for-profit organization that we run, has done a full report and we've submitted that as well. Now, I would really strongly urge you, listen to this and give your feedback as well. We have been talking about KYC forever, but RBI's own committees have issued warnings and recommendations to say that KYC is a problem, and RBI continues, to my mind, to ignore one core issue, which is to issue clear, enforceable directions to banks on resolving this continuous harassment. Directions are not master directions, okay? Because these master directions are in a way of suggestions because there are no consequences. So India's banking regulator has not lacked on committees, circulars, proclamations about its commitment to consumer protection. It has introduced all kinds of internal and external ombudsman, customer services committee, published customer charters without teeth. Each of these is touted in its annual report as an achievement. We continue to suffer. 3 months ago in March, I was really hopeful after listening to a speech of Governor Sanjeev Malhotra, fiery speech in which he quoted the famous Northstorm tire story, which exchanged tires even when the company wasn't selling them. This is like a classic in what should be customer services, and this is what Governor Malhotra said he expected from banks. In fact, even a single consumer complaint was unacceptable. Of course, it raised hopes, but I pointed out even then, if you looked at that previous video, that the intent has to translate into action. The action has been another draft KYC circular, and believe it or not, this is the nth update. This circular is inviting public comments, like I said, and it is specially targeted at people who opened accounts under the Jan Dhan Yojana. Why Jan Dhan? Because they have completed 10 years. Innumerable, thousands and thousands of accounts have been frozen. People's scholarships, subsidies, pensions are not reaching them because their accounts are frozen and nobody cares. Professor Redress has been writing about this from Chhattisgarh, Uttarakhand, where he works, but nobody has done anything. This RBI thinks is an action. Now, anyone who has searched KYC updation online will know that this is not limited to remote areas and poor Indians. It affects every one of us. There are tens of thousands of complaints about accounts being unilaterally frozen without warning, though they're supposed to, repeated visits that are required, even though notices are supposed to be sent. But we'll come to that later. RBI thinks that this is all very well, tweaking a little bit, minor concessions is going to do it. And that's what the draft circular is about. It has repeatedly refused to have standard operating procedures and consequences. So whether you have a charter or a standard operating procedures, there has to be a time frame in which things have to be done. There has to be a protocol. It has to say you can only ask for A, B, C, D and no other. And if it's not done within that time frame, there have to be consequences to the bank. We have been saying this endlessly for years. We made this presentation to Deputy Governor BP Kanungo's Committee on Customer Services in 2023. We thought he came up with an excellent report. We hoped that it would be implemented because it covered every point of friction faced by us as consumers, but it has not happened. Kanungo also recommended model operating procedures, but added standardized claim forms, rationalized documents, consumer awareness initiatives, and of course, automated traceable reminders for KYC. What is traceable? We are in a digital world, so even if you open an email, that is traceable. So it's not that I send it to you and I say I've sent it to you. Whether you've received it, whether it's bounced, whether you have received and read it, as in opened it, is traceable. If banks say they have sent you 3 warnings or 3 reminders at intervals, they have to be able to produce evidence before they block your account. They don't do this. All of us learn about it the hard way. When a check bounces or you go to withdraw something and your account is frozen, you can't do it, people suffer. RBI doesn't care because it's not taking the next step. Now let's look at these new draft regulations. We're putting a link here. Look at it. Please go to the bottom, take that email and write to them. These measures, like I said, fall short of what is required to stop harassment. One of the reasons also is that the RBI governors seem to think that your Know Your Customers Central Registry, which is CKYCR, is working and people upload. Since March, the RBI is aware that it is not fully integrated and it's not going to happen so fast, and it may even take years because banks work with all kinds of apps and multiple vendors, sometimes hundreds of them, and not all of this is properly integrated into their core banking system. So saying that we will upload or one bank will upload and everybody, including RTAs, are going to get your updated CKYCR, which is the ideal standard that this is written for and created for, is not going to happen. They say it's not going to happen for maybe a year or two, right? And here's the irony. You will not know that the systems are poor because every bank, if you have an app, is persuading you to link every other bank account over here, all your utility payments, phones, what have you, into one common app, their app. If you think this is to help you, forget about it. This is to allow your bank to get a 360-degree snapshot of your financial profile so that they can sell you all kinds of products, insurance, shares, SIPs, what have you. So now let's come to the RBI proposal. There is one big concession, which is that the RBI has said low risk customers, most of us are low risk, okay? We don't even know whether we are classified as low risk or not because banks don't tell us. But low risk customers, especially those in remote areas who are actually getting only pension scholarships, should not have their accounts frozen even if KYC is overdue until 30th June 2026 or 1 year from due date, whichever is later. So you have time until next June, provided, of course, that this draft circular is actually become a regular circular directions this month. Okay, so before 30th June, if it happens, you will get 1 year or 1 year from due date, whichever is later. Now, this draft circular doesn't say that until then all bank accounts that are frozen will be unfrozen. All it says is that banks will monitor these accounts for suspicious activity, but they have to first unfreeze them, which is not mentioned over here. But if it happens, then this vulnerable segment will at least have a year, and so will all of us whose accounts are frozen, because I do still get complaints at the foundation of people who say our accounts are frozen. Now, we have done a study, like I said, the hardships are incredible. Those of you who want to read it, it's there on our website at Moneylife Foundation. The second suggestion is bring in banking correspondents. So it wants to empower banking correspondents to facilitate KYC compliance by going there and verifying documents, collecting self-declaration documents, helping perform eKYC, issuing acknowledgements. Wonderful. I mean, it's all sounds very good. Why wasn't it done? Because you had thousands of banking correspondents already, right? There is a good reason, because banking correspondents have faced serious complaints about cheating rural customers. They've been accused of charging illegal fees earning illegal commissions, ghost transactions, delaying payments, falsifying records, and what have you. And none of this, as you know, the minute you go 2 hours outside the metro cities, grievance redress is non existent. Even in cities, it is by and large a nightmare. The draft circular makes no mention again of any safeguards or oversight mechanisms except the broad ones which we think are not working. Moneylife Foundation has pointed out, based on a report in the Economic Times, that UIDAI, which issues us Aadhars, is planning to set up Aadhar Seva Kendras, which are modeled on the Passport Seva Kendras run by Tata Consultancy Services, TCS Limited. We know that that's an enormous success. So it's a great idea, especially if it's going to be run as well as the TCS Kendras, because it will offer a more robust and accountable solution, unlike banking correspondence. Who will pay for it? RBI has plenty of money. It has over 72,000 crore of our unclaimed funds, as in people like us, not government funds, which are lying in the Depositor Education and Awareness Fund, and a small fraction of it, instead of being used for advertisements with Amitabh Bachchan telling you what to do, if they were used to create others service Seva Kendra like Seva Kendras, lot could happen. KYC awareness campaigns and KYC updation would not be required. You would be able to go over here, and all those 30 tokens and whatever, which means delays and multiple trips to people in rural areas, can vanish overnight, right? So second point also, one step forward, two back. Third one, traceable notices. This is what I told you we asked for to the Kanungo committee. So now it appears in the draft 2 years later. So same point, banks will have to send 3 reminders. That's already the rule. The new addition is one of them has to be a physical letter. And all these 3 have to be logged digitally, as in made traceable. Thank you. Finally, after 2 years, it's in the draft directions. Hopefully, it will get into the real directions. This may only help customers escalate issues to the banking ombudsman. Mind you, all this is going to do is provide you proof when you want to fight. Will it end harassment? Not necessarily. Banks will, yes, of course, be worried that it's all traceable, so they can't unilaterally freeze your accounts without checking their own books, saying, have we sent it? Have they got it? But it'll help your fight. And it'll help your fight, but it is not a permanent solution. It's not like making banks accountable. The next, RBI says that it's easing address requirements. So the draft says a self-declared current address that is different from the one on UIDAI records and will enable digital KYC can be done. You can do a self-declaration and have a different current address. I wonder how it's going to happen, but it's good news. And they say that KYC updation can happen through ATMs, net banking, letters, or through banking correspondence. Again, wonderful. We have to see it implemented. Good in theory, but I recently went through KYC updation for my address in the same PIN code. Each bank had completely different systems, rules, and it was a nightmare. So it's all very well to say you can do it through ATMs and net banking. It has to be implemented. In fact, even CKYCR was an issue. In one instance, a bank uploaded my updated address with current address and previous address being exactly the same. The CKYCR system should not have accepted it, but it did. And it sent me a letter saying it's been updated. What do I see? Old address, new address, identical. So past address and current address is the same. No update had happened. Systems have to be checked. RBI is not talking about doing that. Here's a draft which says this will happen and that will happen. We don't know whether systems are in place to make it happen. Now, unless banks are made accountable, they don't have to put systems in place, because what do they care, right? The real issue is no accountability. What's truly meaningful now in this draft circular? The 1-year reprieve on account freezing. Even here, the burden of compliance is on the consumers. What RBI needs to do is mandate seamless systems, establish grievance redress protocols, set up permanent infrastructure like the Seva Kendras. Only then can KYC updates happen with dignity and ease during this 1 year period. And if it does not happen, if you don't have systems in place, if you're not going to introduce accountability, then don't freeze accounts until systems are in place. It's not chicken and egg. You have to have your systems in place first. You have to make banks accountable, and only then can you freeze accounts. Instead, the reverse has been happening, and we've been putting up with it forever because we are helpless, we are disaggregated, we cannot fight, and our legal systems are too slow for us to get any results, even if we decide to go to court. So we keep banging on the doors of the RBI and the Finance Ministry and hope that they have friends and relatives who suffer the same consequences and good sense will prevail. The real tragedy is that RBI knows exactly what has to be done. Its own Kanungo committee is very clear that banks simply cannot freeze customer accounts. Yet, instead of acting decisively, RBI continues to issue unworkable directions without any accountability while customers continue to suffer. So, what do we want in a nutshell? We want all accounts that are frozen unfrozen for this 1 year or until 30th June 2026. And we want systems in place and accountability before you unfreeze them. So the master directions actually should give that 1 year time, not just for us, but for banks to have systems in place. If you agree, please make the effort to write to the RBI and please share this video so that more people do this. And do subscribe. Thank you.